Good morning from Nigeria, good afternoon from Kenya.
Yeah.
Hello, Africa and the world. You are welcome to the second in the 3 series of Post-COVID-19 webinar organized by the School of African Microfinance. And before we start, ladies and gentlemen, we need to quickly set our ground rules. Please mute your microphone, and my co-host will always assist you to mute your microphone, especially to our dear participants. And we will release our panelists by the time we want them to speak. Then type your questions in the chat box. Our team will be watching the chat box, and they will be sending the questions to us, and our dear panelists will be addressing the questions. And we will need to give us your feedback on the webinar, as the form will be sent to you immediately we finish. We have very few announcements to make. I'm glad to inform you that this third series of the webinar is going to take place on the 7th of July, 2020, and details will be shared with you shortly. Again, you need to expect our SAM 2020 online conference coming up from September 8 to 10. This is the first time in 16 years that we'll be doing the training online. We are responding to the COVID realities. So this year we are not going to meet in Mombasa. We are going to do it online. So mark your calendars for SAM 2020 conference starting from Tuesday, September 8th, and then there will be full day of masterclass on Thursday, September 10th, all happening online. Once again, you are welcome to our webinar. As I noted earlier, this is the second in the series. In the first webinar, we discussed risk management, disaster recovery, and business continuity for MFIs in Africa. Today, we shall focus attention on post-COVID strategies for our MFIs. We are all in it together. It is all happening to all of us at the same time, and it is forcing our institutions to rethink our business model. Many of us have extended our runways. We are redefining our survival strategies. And in the last webinar, we advised that the moment your institution can survive this year, you have made profit. So you need to consider survival as a major issue. So this morning, our panelists will be talking to us, and join me in welcoming Tom Sitati. Tom is an architect and a brand management specialist. Tom is our SAM lead expert in brand and marketing. And I'm happy to introduce to you Tom Sitati, who is the 2013 African Brand Leadership Award winner. Tom, you are welcome. Can you greet our participants? Over to you, Tom.
Thank you very much. Good morning and good afternoon, depending on whether you're on the east or the west part of Africa.
Thank you, Tom. Tom is joining us from Nairobi. Again, on our panelists this morning, we have Eva Kiplagat. Eva is the CEO of Customer Service Consulting Company of Kenya, and she is our expert in residence and lead faculty on client management and customer experience. Eva, you are welcome. Please, can you greet our participants?
Thank you, Dr. Steve. Good morning, good afternoon, and good evening to all our participants.
Thank you very much. And the last but not the least, I'm pleased to introduce to you Joe Maye. Joe is our business development strategist and is our lead faculty for business development. Joe has worked across Africa, Europe, and America, and he is coming into this session with a lot of experience in business turnaround and crisis management. I'm pleased to welcome you, Joe. Please, can you greet our participants?
Good day to everybody. I think we are in exciting times. I encourage us to look at the opportunities that this corona situation has presented for us.
Thank you very much. Our panelists have come with a collective experience of over 100 years, and will be sharing practical strategies for MFIs to cope with their operations in the COVID times. This is part of our discussion to promote continuous engagement with our alumni and potential participants. Our panelists will identify challenges that MFIs should anticipate this period and provide solutions as experts in their different fields. So we're going to start with Eva this morning, who is going to be talking to us on client management and customer experience. To you, Eva, how do we define customer experience? Does COVID-19 have any impact on customer experience, and how do we see our customer experience in line with our current realities? Over to you, Eva. Good morning and welcome again.
Thank you, Dr. Steve. Before I start, I'd just like to say that we are going to be using the terms customer experience, client management, and customer service interchangeably. So we mean the same things when we talk about that. Now back to your question. Allow me to answer the second part of this question first, then I'll go back to the customer experience and how we see customer experience in line with our new reality. Does COVID-19 have an impact on customer experience? The answer is a definite yes. The challenges brought about by COVID-19 have significantly impacted customer experience, and the extent of this impact will really depend on how MFIs have been approaching and practicing customer experience, which leads me to the definition of customer experience. This is an important question because the way institutions practice customer experience will depend on how you view it and how you define it. So here at SAM, this is how we define customer experience. We define customer experience as the sum total of what an organization does to anticipate, meet, and exceed customer expectations, and therefore increase customer satisfaction, loyalty, and advocacy. Let me just repeat that. It's the sum total of what an organization does to anticipate, meet, and exceed expectations, and therefore increase customer satisfaction, loyalty, and advocacy. So there are three implications I would like to really highlight from this definition very quickly. The first one is that customer experience is everything an organization does. So this is opposed to the usual understanding that customer service or customer experience is a department or is a role of just a few individuals in the organizations. Why do we say this? Let me illustrate with just some examples. If we were to look at some typical customer complaints that we normally have in our organizations, maybe even before COVID, we might get these three examples. The first one might be from a customer who applied for a loan, expected the interest to be X% to be paid over X period, but later on realized that that interest and the repayment period was different from what was promised. So that's one complaint. A second typical complaint might be from a client who applied for a loan, expecting it to be approved within 3 days, but then was disappointed when the approval and disbursement of the loan took much longer, say 2 weeks instead. A third complaint might be from a client who has defaulted on their loan repayments and is expecting that the MFI would negotiate and talk to them. But then instead the staff threaten them and they come and collect their household goods in a very rough and unpleasant way. So the first complaint relates to the process of acquiring the customer, specifically to do with what was communicated to the client versus what actually happened. The second complaint relates to the process of approval and disbursement in terms of the turnaround time that the client was expecting versus what actually happened. And the final complaint relates to how the loan was collected after the customer defaulted. So in these three complaints, you can see the different parts and aspects of the MFI contributing to the experience of the customer. If I may say that the client protection principles really are meant to address all these aspects of the customer experience. So in our new reality of COVID-19, it is critical that we appreciate that customer experience is a function that cuts across the whole of the MFI, the whole organization, the whole institution. This means that all staff, including management, have to own and contribute to the active management of the client relationship across all the processes. If I may go to the second principle from that definition that I've just shared with you that I'd like to highlight, is that clients come to us with specific needs and expectations. So broadly speaking, we talk about two types of needs. There's a functional need and an emotional need. Functional needs have to do with the problem the client is trying to fix. For example, they may be wanting to get capital to expand their business. But let's focus on the second need, which is the emotional needs. Clients are human beings, and human beings have need to be acknowledged. They want to be respected, they want to be listened to, and they want to be understood. These are just a few examples. ultimately, they want to know that you care beyond the business that they give you. So they appreciate it when you invest in a relationship with them for the long term. When you do so, this becomes a win-win situation for you because you can leverage on this relationship even during such a crisis as we are experiencing now with COVID-19. The final principle I'd like to highlight is that we must anticipate, meet, and exceed customers' expectations or our client expectations. In the challenges we are now facing with COVID-19, it is critical that we anticipate our clients' needs. Management and staff should sit down and proactively think about the needs that clients have so that they can be proactive in addressing those needs in advance. In CX, we talk of putting ourselves in the shoes of our customers so that we can anticipate the needs that they might have. So in the same line, when we put ourselves in the shoes of the customer, we can identify ways not only to meet, but exceed the expectations. So when we exceed these expectations, especially the emotional ones, we are able to create a wow experience for our clients. And this is what then cements a long-term and a strong relationship. So in this context, we need to be thinking and planning how to exceed expectations of our customers as well, and especially the emotional ones during this crisis, because how we manage our clients now will impact our MFIs either positively or negatively during and after COVID-19. Thank you. Back to you, Dr. Steve.
Thank you very much, Eva, for that insight you have provided. I'm now going to Tom. What practical tips can MFI use not to lose their marketing teams and engage further to continue to explore opportunities in the market? When COVID started, the first casualty was customer engagement. Our customers cannot come, we are locked down, we don't even know when we'll come back. Now, we are now learning how to come back. What practical tips can we use to sustain our marketing as MFIs? Over to you, Tom. Thank you very much.
Okay, thank you very much, Dr. Ogidan. I think what we need to first do is look at our mindset as the marketers. And when I say marketers, again, the marketing is actually not a department. The same way Eva said, customer experience or customer relationship are not a department. Each of us working in an MFI or an MFB are responsible for that customer experience, are also responsible for building the brand, which is what really marketing is about. So that's the first thing we need to look at. All of us are responsible for this. All of us are the marketing team, if you can call it that. All of us are the marketing team. All of us are responsible for building this brand. Next thing, with that mindset framed in that particular way, the other way to look at it is we have a situation, we have a circumstance, we have almost, let's call it a new marketing environment within which is an ailment called COVID, which has changed several things. We can look at it as a huge problem and therefore run away and hide. We can also look at it as an opportunity. I choose to look at it as an opportunity. Why do I choose to look at it as an opportunity? It's because of how you define a brand. A brand is really about relationships. A brand is not about that loan you're offering. It's not about that particular deposit-taking product you're offering. It's not about your product, it's not about your service that you're offering in return, of course, for benefit to the organization. It's actually down to the relationship. Meaning, we actually now find ourselves in a situation where we may not even be able to offer our product or our service as easily as we were able to before. As you put it, Dr. Ogidan, now we have a situation where customers may not be able to come, or quality customers are less and less because of their circumstances. So how do we, the question now becomes for the marketing team and therefore for everybody, the question becomes, how do we continue building those relationships? Devoid of having a product out there, devoid of having a service or having too little of it, that the focus now becomes, think about me. Eva talked about two words she mentioned quite a bit, relationship, which is what really brand is about. And she also mentioned emotional needs. And now what we need to do first is understand what are the emotional needs. We need clarity on that. I'll talk about what you may call the 3 C's in building a brand or in driving marketing. One is about clarity. We need to get clarity of where our customers are. And that clarity of where our customers are should dovetail with the clarity of what our brand is about. A big part of getting that clarity is emotional. Where are they emotionally? Are they hurting? Are we talking to them? Are they struggling from their businesses? What can we offer them beyond our products and services? What can we do to prove that we are with them? When you look at the history of many MFIs, many MFBs, they came from an altruistic perspective where MFIs were formed to come and actually serve a lot of the emotional needs, and financial was maybe 30% at that point. And as we did that, we almost need, our clarity lies in us going back to why do we exist? So let's get that first. Once we get that, then the next thing is to make sure we are consistent in how we start delivering that. Almost, it's a morphed need. It's a new need that we're delivering. The need is beyond the product and the service. The product and service is part of it, but beyond that, it's now what I may call real support, real being with the client. And a lot of it will be differentiated depending on your institution, why it was formed, what was the real reason why the institution exists. We need to go back to that and then consistently deliver that across the organization, not just the marketing department. The next thing we need to do is, we talked about being clear, we talked about being consistent. The next thing is the word constancy. We need to do that over time, because the truth of any relationship, even interhuman relationship, is down to, are you delivering something over a long time? Then you become that thing. So if you put those two together, right from getting the clarity, right for constantly delivering, then we're able to do that. And we do that knowing very well, or look at these circumstances, this circumstance we find ourselves in, as an opportunity to prove the relationships we kept on talking about are the reality. That's really the opportunity we have, and that's the mindset I'd like us to look at it from. And that gives us the opportunity to be able to build and grow our brands. Back to you, Dr. Ogidan, please.
Thank you very much, Tom. I'm coming now to Joe. One of the first reality we got when COVID started is that the method of last year was not good enough for us to do business this year and position us for next year. There's a lot of discussions encouraging businesses that cannot cope with their strategy of operations to pivot. Can MFIs also pivot, given our size, given our location, and given our peculiar situation in Africa? Over to you, Joe.
All right, thank you very much, Dr. Steve. That is a very good question. What do we do in this circumstance? And I will piggyback off of Tom's last comments, which is saying that we must go back to who we are. So it depends on what we mean by pivot. If by pivot, we should start selling face masks, the answer is absolutely not. The first question to ask in any circumstance is to ask ourselves, who are we? What defines us? And we must stay true to who we are, to who our essential nature is. When we do strategy, when we help businesses to plan, we say that businesses have to be very clear about what it is that makes them unique in the market. Are we unique in our operational efficiency, which means that we do things quicker, faster, cheaper, better? Or are we unique in our innovation and product differentiation? Or are we unique in customer intimacy? And Eva was talking about the customer dimension. Whatever our core strength is, we must stay true to that. If we walk away from our core strength, we fail. And in simple terms, our core strength or our differentiator or true nature is something that's rare. If you think that you have a unique quality, but everybody has it, then it's not rare. So at this time of COVID, you must go back and ask yourself, what is it that defines us uniquely from everybody else? And you must stay true to that. There are some things that you should pivot on, but I think I will address those in the next question that I am asked. Over to you, Dr. Steve.
Very much, Joe, for the insight you have provided. I'm going back to Eva now. What are the critical actions organizations should take at this period? Bearing in mind that COVID-19 has actually affected our client expected inflow into their businesses. Everybody is broke. Many countries like Ghana and Nigeria are reporting rising inflation, How can you manage a client who cannot pay back his loan, even with concession on outstanding interest, knowing fully well that this portfolio is our greatest asset and we can see the portfolio going down consistently? Eva, what are the critical actions we must take at this time? You are still on mute.
Can you hear me now?
Yes, we can hear you now. Thank you.
Okay, great. So thank you for this question. Indeed, MFI operations have been affected significantly. I was looking at a study the other day carried out in Pakistan 2 months ago, talking about the impact of COVID-19 and the future of MFIs. And they're saying that household incomes have dropped by 90%, and 70% of the clients who are being interviewed were saying that they would not be able to repay their loans. So I'm sure that number has significantly gone up since then. So this is the context we are operating in. On the other hand, bearing in mind that clients have two types of needs, as we had talked about, there's a human side to consider. We must recognize that both clients and the staff have high anxiety and stress caused by the fear and the uncertainty of this pandemic. Both clients and staff are worried about their future and their health. In this same study I'm talking about, they rated their level of stress at an average of 8 out of 10 on a scale of 0 to 10. So where should we start? I think first we must first pay attention to our staff. In customer experience practice, we talk about having two types of customers, the internal and the external customer. The internal customer is a staff member who is very critical, of course, in the delivery of that service to the external customer. If we manage our staff in such a great way that we get their loyalty and their commitment, then they translate that to the external customer, which then translates to stronger relationships with our external customers, which means better business for us. So we need to first attend to the internal customers' needs, starting with the emotional ones. We need to check on them. How are they doing? Assure them. Some may be concerned about the security of their jobs because they're aware that other organizations are cutting back. Every time we are seeing in the newspapers, this organization has let their staff go and so on. We need to communicate and let them know what the institution's stand on the pandemic is, and share with them the plans that we are proposing to put in place to ensure that we have business continuity. We need to involve the staff to give suggestions on how and what adjustments we need to make to cater for our clients. Our staff have a lot of information about these clients, so they have the answers. A lot of them have the answers on what we need to do. We need to provide the resources they need during this crisis so that they feel safe while working, including the masks or the sanitizers, or the means by which they need to travel to see clients for those of the MFIs which are still able to do that. We need to review our operations and make changes to work schedules to accommodate the disruptions that operations have had been impacted with, especially when it comes to government regulations on lockdowns and so on. For example, we can institute shift systems. I was just the other day learning that Wikipedia, an international organization, has reduced their working hours for their staff by half because they recognize that their staff are going through a lot of stress at the moment, working from home, managing their children, and supervising schoolwork at the same time as doing their work. So I know this is an extreme example, but it's just an example of how an organization is communicating in action, how much they value their internal customer. We're also talking with a colleague of mine who's on this call, Rose Mwaneki, who was saying that the senior management of ECLOF here in Kenya and an MFI called BIMAS as well have done extremely well in connecting with their staff during this pandemic. And this has resulted in the staff feeling much assured and motivated to continue connecting with their clients and have been able to continue to do business and even collect their loans. When it comes to the external customer, just like the staff, we need to check on them. How are they doing? Remember our emotional needs. Our clients want to know that we care about them as human beings and not just for their business. Secondly, we need to take opportunity to share important information about what they can do to keep themselves as well as their families safe during this pandemic, or even what they should do in case they suspect that they have been infected. Third, if you can go beyond checking on them, just in terms of communication, and do something specific, take an action, especially for the vulnerable clients, then this will even be better. In this study that I was sharing and mentioning about Pakistan, that was done in Pakistan, some MFIs have taken action to provide charitable resources, including food, for some of their vulnerable clients who had completely been affected or not even able to eat. We need to be able to accept partial payments from clients. This is where we now start to renegotiate. We're checking on them, checking how their business is, understanding that they've been impacted. And those who are still working, we say, you know, share with us what you have rather than not paying your loans at all. In a lot of studies in CX, we know that customers really don't expect any organization to be perfect. They just expect that organizations would communicate. So in a time of crisis like now, it's very important for us to communicate proactively. Whatever changes have happened, whether to our product, whether to our collections, whether it's to our processes, we need to be able to communicate these changes all the time. We need to leverage on the relationships that we have with these clients, but also with other partners. Juhudi Kilimo here in Kenya has been able to leverage the relationships they have with the local administration and have continued to meet with their clients, but under supervision by these government officials. That's how strong their relationship has been. We need to adjust our service standards and to communicate them to clients. If we are still able to disburse loans, but it's going to take us 2 weeks as opposed to a week, we need to be able to communicate that in advance. Of course, from a strategic point of view, this is an opportunity we have when business is low to now take advantage of this downtime and perhaps look at now our customer experience strategy, our plans. If we didn't have any, we need to develop a new one. Identify someone to drive that process, but ensure, as we have said, that there's a team that cuts across all the departments that is represented so that you have a comprehensive plan. It's also during this downtime that you can explore the opportunities to adopt technology. If there's one lesson all institutions have learned during this time is the need to adopt technology to deliver services to clients in a seamless and efficient way. So in conclusion, let's remember that it is in times of crisis when customers really get to see how you come through for them. The results will impact their sense of trust, and then they will be able to, it will impact then their choices to be loyal and committed to us for the long term. Back to you, Dr. Steve.
Thank you, Eva. Thank you very much. I'm excited about those insights because we may bring back the profit after COVID-19, but if we lose our staff to COVID-19, we may not be able to bring them back. And our colleague from South Sudan is asking a question, and this question is for Tom. COVID-19, social distancing, and the protocols of engagement, all these have affected our relationship. What is the impact of this on traditional in-person marketing, and how can our MFI survive this situation? Even the way we greet our customers has changed since COVID-19. Everybody is a suspect now of carrier of this virus. What is the implication of this for our brand and for our marketing? Tom, over to you.
Yeah, thank you, Dr. Gidan. I think the good thing is COVID has not just affected the microfinance institutions or microfinance banks alone. It's affected everybody. Why I'm saying good for something that is bad is because we all now, because we are in it together, and you said that at the very beginning, we are all in a position where we are extremely understanding. And so when things change, everybody's understanding. We're also understanding that you cannot, for example, visit your own brother across town because of social distancing and the kind of measures that the different governments across the continent and across the world have put in place. And so it's not different for microfinance institutions where they find that the same way you have now to maybe FaceTime your brother or call him on the phone or interact on social media, It's the same way now, the institutions also, because again, the word relationship has been mentioned several times. Now that the nature of how that relationship is nurtured has changed. We are calling it social distancing, but it's actually not social distancing. What it is physical distancing. I think we need to get that right, because there are other ways of socializing, and although a lot of those ways of socializing are powered by technology. The use of a lot of maybe MFIs and MFBs across Africa have not been extremely good at using technology. I said at the beginning, this is a time for opportunity. So this is the opportunity to do so. Before, maybe there was resistance internally. There could have been resistance externally from the customers. Right now, there's no resistance because the circumstances have created an opportunity for where we must change. And so you find now customers are ready to change. There's a study we did just checking about the culture and how people are changing. One of the big things that we found in the study, the results will be out tomorrow, so I'll just give a little of it. It said one of the big things that have changed that people are ready for change. And so they're also ready for change in terms of how they interact. They're ready to use technology. Here we are, we've never done this before. For 15 years, we've always met in Mombasa, once a year, like clockwork. We have been forced to change. I'm seeing on the tab here, we are 205 people. Some only has 100 people. We have changed. We have changed so much, we have exceeded the expectations of the norm where we actually meet. And so in the same way, in short, customers are ready to change. It's now down to the microfinance institutions to change and embrace the new ways of interacting, and they exist, they are there. Customers have actually been ahead for some time, and now it's time to do that so that we can continuously nurture those relationships. Like I said before, the brand is down to the relationship. It's down to, as Eva put it, satisfying those emotional needs. The product can follow from there. Back to you, Dr. Ogida.
Thank you very much, Tom. I'm coming back to you now, Joe. As a business development strategist, what options will you suggest as top priority for this period of crisis? Reviewing old products for the same market or revamping old products for a new market? Where do we go from here? Our businesses must survive. Our MFI must continue to be in business. What are the opportunities? Over to you, Joe.
Thank you very much, Dr. Steve. I'm going to take a moment and project 2 or 3 slides just to illustrate the thoughts I want to share. So I am assuming you can all see the screen. What I have put on the screen is a quote by the famous hockey player Wayne Gretzky, who won very many awards for playing hockey very well. And somebody asked Wayne Gretzky, why are you such a good hockey player? And he said, a good hockey player plays where the puck is. That is where the ball is. A great hockey player plays where the ball is going to be, i.e. they anticipate where the ball is going and they get there ahead of the ball. The temptation at this time of COVID is to react to the present, to start saying, oh dear, what do we need to do today? What do we need to do now? MFIs that are going to win in the long term, whilst taking care of the present, are actually going to design their game for the future. They're going to ask themselves, all these changes that are happening, what do they mean for our business, for our customers, for our market? 1, 2, 3, 5 years from today, and what does it look like to get ready from that? So again, the earlier question about pivoting is about preparing for the future, not reacting to the present. So the first comment is, yes, you must address your immediate crisis, but as a leadership team, your focus must absolutely be on the future and how you get there ahead of your customers. So that would be a key first point I would make. The second point, the first question was, should we pivot? And I think we have said you cannot pivot on your strengths. Your core strengths remain the same. very, very difficult to build new core strengths. If your core strengths are in customer intimacy, Eva talked to us about customer experience, you must stay there. If your core strengths are in operational efficiency, you do things quicker, better, faster than your competition, you must focus on that. And if it's innovation, you must focus on that. However, in terms of the question of what are our options, we like to use a framework that says this is a good time for us to rethink about how we define our customers. It's a good time, like Eva said earlier, to think about how we tailor our solutions. Our customers have functional, emotional, and social needs. We must tailor our products to those changes. And we must change how our customers access our products. And I'm going to give you an illustration. So what we're saying is the most important thing you can do right now is forget about your business, forget about your MFI, and focus on the customer. Go back to what does the customer really need? What's really going on in the customer's circumstances? What is the core need? Businesses win by addressing the unmet needs of their customers' lives. COVID has radically changed those circumstances and has therefore altered their needs. So as an example, if you have a farmer today who is unable to get their grain to the big city because of a curfew or a lockdown, well, the customer's need has changed from saying, how do I get my grain to the market, to saying, how do I store my grain? So now, whereas before your segment was a farmer who is planting seed in the ground, you're now defining your customer as a farmer who needs to mill grain or who needs to store grain. In a sense, you have redefined your segment or your customer, even if it is the same person. So you need to look at your customer circumstances and ask yourself, how does it challenge your segmentation? Then you will also then change your products. Your product is simply the solution to the customer's need. And again, as Eva has emphasized, it could be an emotional need, it could be a social need, it could be a functional need. But again, as an example, where you were giving the farmer money or a loan to buy seed, to buy fertilizer, now you might be saying, I'm going to give this farmer an asset finance loan so that they can buy a mill that will enable them to grind their grain and even to do it for their customers. So instead of a group loan for seed, you're now talking about an asset finance loan. And then you may have to think about your channels. How do the customers access your products? So in the past, you have said, I am not going to give the customer a loan unless I can go to their place of business, unless I can have them fill out a paper form, unless they can present themselves in person to me and show me their ID. Now, you might say to the farmer, we are going to ask you to share with us, or to the customer, your GPS movements for the last 30 days as a way of verifying that you have a place of business. Now, you might say to the farmer, we have a digital form that you fill out and you photograph your ID and your picture and submit them to us. So you have changed how the customer accesses their needs. So again, in terms of our options, the most important thing is to go back to the customer and adjust your product based on the customer's circumstances. In other words, the customer's circumstances is what should define how we pivot and how we develop new products. Back to you, Dr. Steve.
Thank you very much. Thank you for sharing the screen with us. I will go to Eva now. As we mentioned, many of us sit on the board of microfinance banks. When we were approving their budget for 2020, sanitizer was not on the item. Face mask was not there. Now we are confronted with this and our customers are asking for more. Eva, how can we manage customers' expectation? Expectation for new loans, expectation for restructuring of loan, expectation to give them face mask and hand sanitizer, which we were not cut out to do. Where do we go from here in this post-COVID era? Over to you, Eva.
Thank you, Dr. Steve. Indeed, these are challenging times because, as we said, disruptions to the businesses has meant clients are unable to keep up with their loan repayments and their needs that the business has in order to continue, in order for them to survive and to continue to lend to other clients who may be doing well in their businesses. Without collections, of course, MFIs have limited or no funds available to lend to the other clients who are in need. So there are two perspectives to this challenge. And I must say that my colleague Pauline had talked about this quite strongly at the last webinar. The first is that the MFIs have to be proactive in anticipating this scenario where they will have challenges and so are able to look and identify other sources of funds. Pauline mentioned that the board has a very critical role to play now to start to identify other funds that are available from partners, depending on what country you're in. In Kenya, for example, the government has a loan guarantee fund. I believe it's like 3 billion to support financial institutions, including MFIs, to guarantee high-risk loans. And so what that means is that at least the MFIs are then motivated to continue to lend out loans, knowing that the high-risk loans are guaranteed and are able to invest in continuing to manage their clients. We have other partners like foundations such as Safaricom and MasterCard here in Kenya, also partnering with MFIs to provide low or sometimes zero interest loans. And so are donors such as CEDA Sweden, which have partnered with MFIs to offer subsidized rates. The other aspect of this situation is that MFIs have to start to assess their clients requesting for loans based on their unique situation. So yes, we have high delinquency, but how do we address that? How do we manage that? We don't put all our clients in one basket. We have to start thinking about the client in a unique situation as an individual. Joe has just talked about segmentation of your clients, but increasingly now we are asked to think about a segmentation of one, really drilling down to the actual client and their specific needs. So we have to ask ourselves, if this client is coming to ask for a loan and there's high delinquency, but what sector is this client in? There are those who have been disrupted, but there are those, for example, in agriculture that are doing well. What region is this client operating in? In Kenya, for example, most of the businesses in Nairobi, Mombasa, and Kilifi have been affected significantly because of the lockdown, while those in the other urban towns and most rural towns have not been affected as much. So we also have to think about what's the client's value chain. Some have been impacted negatively, while others have not. So you really have to consider the unique situation of this client in order for you to continue to provide these loans. And of course, as I've said, the board has a very important role to play in ensuring that they identify the partners in the different countries to find other sources of funds to continue to keep the business afloat. Back to you, Dr. Steve.
Very much, Eva. So Tom, now, it is not just right for us to say, oh, we are sensitive to the needs of our client. We need to prove it. We need to demonstrate this. What can we do as MFIs to ensure that our products and services are sensitive to the needs of our client this season and even moving beyond post-COVID? How do we demonstrate this? Thank you, Tom.
Okay. Good question, Dr. Ogidan. Fortunately, Eva has answered a lot of it. And so has Joe, because the words that jump out at me is segmentation of one. The other word that jump out at me is the emotional needs. The other word that jump out at me is looking at exactly what is happening in the client's business. We are dealing with, for MFIs right across Africa, and I've consulted for tens of them across. We have extremely resilient. We are now, we are all busy talking about resilience right now. We have, and when it comes to our customers, the resilience is real. We have customers who are able to easily, to use that word, pivot in no time in terms of how they continue, because I can tell you for a fact, our customers are not lying down to die. Our customers are switching, changing businesses. If they were farming grain, you will find them selling eggs tomorrow because they must survive. And that's what they have been used to. This situation, of course, is aggravated, but they have been living under those circumstances for a long time. And they're the same customers who have been keeping our MFIs alive. So to answer your question more directly, we need to engage them, of course. We need to engage them, understand exactly where they're coming from. There's no MFI I've come across or worked with that says we're in the business of lending money. I've never had that. Never. They always say something else. What are they in the business of? So ask your MFI, asking yourself, because that's, again, going back to your own strategy, going back to why you were formed, of what are you in the business of? Nobody is in the business of lending money. You do lend money, but you do it to facilitate something. That something may have changed. That's something you might find you're guilty of not fully understanding it. So it's time to first go and understand what is the real need you're satisfying. By getting that real need, where, for example, and Joe gave a good example, you are lending a farmer money to, for example, transport their grain to the market. There's a border closure because of lockdown, so the grain is not going to go to the market. So the money you're giving them is not for transport. You're now giving them money, and you'll go there and understand, now actually what I need is to store. Or maybe that customer does not know that. And so it's you to intervene and say, actually, here I can see an asset, that's this grain. COVID is not going to be here forever. The circumstances of the lockdown are not going to be here forever. Meaning, can I now intervene, understand your real problem is actually this grain, which is an asset, meaning you're not a bad customer, just needs to be stored. I'll use Joe's example. And so let me facilitate that, knowing in the next couple of months, maybe a few weeks, you will be able to transport it and there'll be a ready market. As opposed to me saying, you're not selling grain, and that's me not understanding you intimately. You're not selling grain, you can't reach the market, you're a bad customer, I can't lend you money. So very different circumstances. So it's down to actually going to that segment of one, engaging them, understanding their real needs, both emotional and now I'll add the actual need in terms of finance. Where is it going? In terms of what are you facilitating? Because all of us are the business of facilitating, and it happens to be through money, but we're facilitating something. So by doing that, we'll be able to actually, like I said at the beginning, it's an opportunity. By doing that, you'll be able to actually take that opportunity with both hands and actually prove to your customer that we were not about lending money. We were about creating a certain kind of relationship depending on the brand of our institution. So I'd say, in short, it's actually a time to be able to prove ourselves, engage, and be able to actually really do what we keep on talking about, which is meeting clients at their point of need, and actually do that both emotionally, I would say, first, and secondly, actually get what's the real need. Joe kept saying, forget about your business. Maybe many of us were taken aback. The thing I would add there is remember or find out about your client's business. And that actually is your business. Thank you very much, Dr. Steve.
Thank you, Tom. Thank you, Alice, for your question. We have less than 15 minutes to go, so please, participants, type in your questions. We'll respond to it. Then somebody is asking, and I'm going to Joe now. Loan loss provision is going to wipe off our profit before tax, especially this year. What are we going to do? And can product development help our MFIs to keep afloat and operate within this period? Is this a good time for us to develop new products? And how can we engage product development as a survival strategy? And should we be counting our profit this year in terms of dollars? What are the other aspects we need to look at in our survival? Thank you very much. Joe, over to you. These are questions from our participants.
Thank you very much, Dr. Ogidan. Someone once said, never let a good crisis go to waste. We have a crisis. If you let it go to waste, that's going to be your loss. Another quote, Warren Buffett said, Be fearful when others are greedy. Be greedy when others are fearful. Everybody is fearful at this time, and we would say that this is your opportunity to be greedy. This is your opportunity to be courageous. This is your opportunity to be aggressive.
Yeah.
For MFIs that are seeking to differentiate themselves and win, you need to look at this time as a chance to step up and gain market share. While people are still waiting for the dust to settle, you need to move. The opportunity will go to those who are quick, those who are agile, those who are innovative. I think the challenge is to shift our thinking from the end product. Typically, when we think of product development, we think of a product. We think of a loan with a name and a picture and a term sheet that shows a tenure and an interest rate. The challenge is to say product development is not just the end product, it's also changing how we do things, how we communicate, as Tom would say in branding, how we manage the customer experience, as Eva would say, how we manage the back end. So take that heart of product development and say, how can we do things differently? A few examples. Many of us have struggled with the question of, will our customers go to mobile banking? Will they use an SMS? Will they use an app? This is a perfect time because movement is restricted to get your customers to downloading your app, to registering for your app, to using SMSs for balance inquiries. At this time, you won't have to work very hard to convince them. Many customers feel like they need to come to the branch to do something. This is a great chance to say to them, we want you to get used to the idea of photographing an application form, to filling a digital application form, to taking a self photo and sending it, to getting their personal data. We all know that the mobile lenders use GPS data to track customers' movement and to make loan decisions. Great opportunity for us to say to the customer, turn on your GPS with our app so that we can improve our ability to lend to you. So as an example, we can drive massive adoption towards mobile lending at this time. Now, so what? Who cares about that? The point of this is that in doing such things, you will get more customer insight. The more the customer shares with you on their phone, the richer the data you have. Two, you will improve the customer experience. If a customer has to get on a bus in the morning for 2 hours, queue in a branch for another 30 minutes, and then spend an hour talking to a loan officer, a half day from their business is gone. If you say to the customer, we can do all of these things from your phone at any time of day or night, you have improved their customer experience. You have improved your visibility because now their association with you is not limited to the branch. The brand is in their phone, in their pocket, and it is a chance to reduce cost. An example is this conference. We all know that a big component of attending SAM is a hotel accommodation. While a digital conference has its drawbacks, there are tremendous opportunities for cost saving. So from a point of view of our P&L, from a point of view of our objectives, revenue and otherwise, this is a great opportunity for us to shift a lot of things to achieve a lot of gains. So I would say people are fearful right now. We encourage you to be greedy. Back to you, Dr. Ogidan.
Thank you very much, Joe. The questions are coming in. Matthew from Main Street Microfinance Bank was asking, should MFI diversify or grow the current portfolio in line with the current reality? And I'm going to go back to Tom now. Can digitalization be a good opportunity to help us manage group repayment? Remigius from Tanzania, we are going to address your question before we close. But Tom, can you talk to this digitalization? Can it help us to grow, or can it help us to manage our group repayment? Over to you, Tom.
The simple answer is yes. We are behind. It's actually time to catch up. Joe talked about let's not lose a good opportunity. And I think let's not let a good opportunity go to waste. So that's the semi-exact quote. So this is an opportunity because of the crisis to actually now go into a situation or use tools which have existed for a while. They have been there. We have, for different reasons, maybe not embraced them, maybe because of the legacy of how we've operated before. So yes, it's time to do that because that will make a big difference. There's another half question in there around whether we need to change or diversify and go into other areas. And I think, again, Joe sort of answered that question, and I'll just re-emphasize it. We have our strengths, we have our relationships that exist. I think I would advise that we deepen those existing relationships. To go back to that farmer with his grain, let's have a deeper relationship with him or her than to go to another one who's growing melons, and we have no idea how melons operate because we have not dealt with that melon farmer before. And therefore, we're not able to, he has no history. So why would we want to start experimenting now when we have a crisis in our hands and we may not necessarily have the capabilities or to deal with that new situation? We already have a situation. Why add another one? That would be my simple answer to the other question. We have relationships, let's deepen them. Let's work. Let's not abandon those who've been with us all this time to go for others, imagining that maybe it's easier. And my suspicion is it may not be easier. Okay, back to you, Dr. Ogidan.
Thank you. Thank you very much, Tom. Mr. Aluko is asking a question, and I'm going to direct this question to Eva because it's a serious question of customer engagement and customer management. I had an experience just yesterday of a family friend that an MFI wanted to arrest for not meeting up with loan repayment, regardless of the fact that she has not opened her business since the lockdown in March. How do you change the orientation of these MFIs to real-time business support institution rather than the money lender orientation? Client protection principles. Over to you, Eva.
Eva, you're on mute.
Eva, you're on mute, yes.
Thank you, Dr. Steve. Sorry about that. I think this is a very important question, and it is something that we as MFIs, and not just MFIs actually, most organizations struggle and grapple with in terms of thinking about how to treat our clients, not with suspicion, not with aggression, but to actually treat them as human beings who have feelings and who have the best intentions, so that we can then grow together. At the end of the day, when we think about our businesses as MFIs or any other business, I like to say we are all in the business of people. We are all in the people business. So I think to the point that I think Tom or Joe was making, that sometimes we might think about ourselves as lenders and we package a product and we say, this is what we are offering you. It's a very, maybe a narrow way of looking at the business we are in. We need to look at that we're in the business of people. Without our people, without our clients, without our staff, we have no business to speak of. So it's very, very important that we change our orientation to be thinking about our clients. And we can see that, especially in MFIs, we talk about being in perpetual relationship with our clients. When they're doing well, we are with them. When they're not doing well, we need to continue to be with them. We need to continue to keep communications open so that we can support them. Clients have been known to actually close down their businesses, suspend repayments of loans because that's their position, but come back years later and pay their loans. And that's because we didn't throw away the client or disconnect with the client when the business was low for them, but we continue to engage with them. And therefore, they never forget such gestures. Clients never forget such gestures when you are with them in a time when they are at a low moment of their lives. So we really need to reorient ourselves, not focusing on the business itself, but thinking that if we focus on the client, if we focus on the relationship, we will get the business. Back to you, Dr. Steve.
Thank you, Eva. Remigius, I come to you now. you said that refugees from Tanzania, before COVID-19, our portfolio at risk was above 80%. What can we do now, in consideration of COVID-19 effects? And your company is already holding over 200 million Tanzania shillings. Joe, what do we do in this situation? We have the infrastructure in place, and then the digital financing, everything is all there, but we are already in deep, but serious portfolio at risk even before COVID-19. Now, COVID-19 has met up on the way. This is the time for you to start negotiating with your lenders. And this is the time for you to engage your client. Engagement is key. But final word from Joe.
Yep. Thank you very much, Dr. Steve. That is a very interesting question. I think the first thing to do is to come to terms with our reality. I like the fact that you're acknowledging that your PR was already at risk before COVID. I think what COVID has done, like any crisis, it exposes us. It exposes your underlying reality. Again, another famous quote by Warren Buffett. Warren Buffett said, a rising tide lifts all boats. But when the tide goes out, you find out who has been swimming naked, he said. So I think this crisis exposes some of the underlying realities in our business. And again, to the earlier question, when we are exposed, the most tempting thing to do is to lash out at our customer, send a policeman to arrest them, go possess their asset. The thing you have to do is you have to step back again and take a hard look and say, I win by addressing the customer's need. In other words, the answer to a poor PAR is in your customer. So what you must do is, again, to quote from Tom, go and understand the customer's situation and ask yourself, how do we reconfigure this? So again, if you had given the customer money to transport grain to the market, they can't do that. What does it look like to restructure that loan so that it becomes a loan for storage or a loan for a portion meal that then enables the customer to achieve their need? So as difficult as it is, again, Eva talked about the customer of one. There's no magic. There's no quick answer. You must take every loan one at a time and say, what is going on in my customer's life? If you address the customer's core need, you do get to win. So there's no silver bullet. It's going to come down to refocusing on the customer and saying, now that his circumstance has changed, how do we configure ourselves for that? I hope that is a helpful answer, Dr. Steve.
Thank you very much. And Wilfred, thank you for your insight you have provided. Wilfred from Kenya, you have advised that digitalization is not always smooth. We need to be very careful in the review, and we need to review our black hacking data, which is critical, and we should ensure that we fully demilitarize our portfolio. This is noted. On the final word, I will take the final word from our panel. We are going to harvest all these questions. We are going to provide insight and answers, and we are going to share with you responses to your question. We cannot answer all the questions, but I will take the final word from Tom and final word from Eva before we go, and we make a few announcements. Thank you once again for being part of this journey and for staying with us. Over to you, Tom. One final word from you before we go.
I'll be brief. Yes. Mine is a quote from a man who was the 55th mayor of Chicago. It's paraphrased from what Winston Churchill said many years ago. And what he said was this: you never let a serious crisis go to waste. And what I mean by that is, it's an opportunity to do things you think you could not do before. Thank you very much, Dr. Ogidan. Thank you very much, participants. I think I'll close off on that particular word.
Thank you. Eva, over to you.
I think I'm on it.
We can hear you.
Yes, we can hear you.
Thank you, Dr. Steve. This has been an exciting discussion, and a lot has come through. I think really in conclusion, I would just like to just highlight what I think has been said again. This crisis has come and has affected not just MFIs, but all organizations. It has presented opportunities for us to really self-reflect and think about ourselves and look at where our weaknesses lie. And so we have the opportunities now to address what these weaknesses are in order to forge and move forward for the future. I wish you all the very best as you deal with the challenges that you're dealing with. And thank you very much for listening to us. Back to you, Dr. Steve.
Thank you. As we made the announcement when we started, SAM 2020 is going to take place between September 8 and 10. And for the first time in 16 years, we are going to do it online. We shall be sharing the flyers with you. Our next webinar, the last in the series, is going to take place on July 7th, 2020, and we'll share the materials with you. And for this webinar, we will share the recording with you, and we are going to answer all the questions you've sent to us through the chat box. We will not go without thanking our support team, Martha from Kenya, Ucha from Nigeria, Yakibia from Kenya, Uche, Gilda, Titus, and Akim. Those are the technical people working behind the scene and leading us and making sure that we have a very smooth program going on. We thank you all for coming, and let's continue to keep safe. It is important we protect ourselves and we protect our families. And again, we must show our staff that we care and try as much as possible to provide the leadership that the organization needs to pass through this period. One thing that we are very sure of is that tomorrow will be different, and then all of us are going to survive this period, and we'll tell the story later. God bless you, and wish you all the best. Thank you, and welcome again.